We've, throughout the morning, and actually if you had the pleasure of joining us yesterday for day 0, you know that, of course, the topic of FTX was raised on a number of occasions in various different settings and panel discussions, and it's certainly something that seems to be on everyone's mind still. However, it's raised some very serious questions and some very important questions for this industry, and one of the things is, how do we safeguard digital assets? And that is exactly what we're going to explore in the upcoming panel. So join me in welcoming our moderator, Andra Maria Maute. She's the co-director of the Swiss FinTech Innovations. She is joined on stage. Sorry, please take your seat. She's joined on stage by Dr. Dirk Klee. He's the CEO of Bitcoin Swiss. Dr. Martin Hiesböck, the head of research at Uphold. Philip Nägeli, co-founder and CEO of Gen2. And of course, welcoming back to the stage, Michael Steuer, co-founder and CTO of Make. Andra, I leave you with these gentlemen.
Thank you. Hi, welcome. Hello, everyone. Very nice to see you.
Hello.
I feel very honored to be here today between these gentlemen. I think we kind of know each other in our industry. I'm surrounded by leaders in the industry. I'm very excited to lead this panel on safeguarding digital assets, one of the hottest topics in financial services, especially after such a tough year, 2022. But first things first, let me introduce shortly this gentleman. So I'll start with you, Dirk. Dr. Dirk Klee. He is the CEO of Bitcoin Swiss. Maybe you want to introduce a couple of
Sure. We are a pioneer of Crypto Valley, founded in 2013, probably the largest crypto house in the country. We provide to our private and institutional clients trading, custody, staking, and other blockchain-related services. My experience is 1 year old, so I joined Bitcoin Swiss a year ago, and I will say from TradFi, and I will say you learn your ropes in a bear market. So this was a tough year, but my experience has clearly exponentially grown during this time. So very excited to be here. We're celebrating our 10th years of anniversary. We've been through various up and down market cycles, and we are a survivor, and the assets of our clients are safe with us.
Welcome, Dirk. Hello. Thank you. Then I'll just continue with another doctor, Martin Hiesböck. He's head of research at Uphold. I'll let you introduce shortly Uphold, Martin.
Yes, Uphold is a digital asset platform. You can trade metals and foreign exchange. And we're not an exchange, just to make that clear. So we are connected to 32 venues, centralized exchanges and DeFi venues. And I think we're the only financial institution in the world, except central banks, that has their assets and liabilities in real time on the website. So things like FTX could never happen to us. We're doing well, as you can see by the expanding waistline. So in my world, you are a toddler. You're 1 year old in blockchain. I got into decentralized computing and blockchain in the 1990s. I wrote I think they used the word seminal article in 2010, how blockchain will change the world. And that blockchain was one of industrial blockchain and, most importantly, product tracing and food tracing. At that time, I was working for the European Union in Asia, promoting European technology. And the big issue was trade. How do you verify that something made somewhere in China is actually the thing that arrives on your shelf in Europe? And then 2017 came along, and the Ethereum came along, which at first was an operating system. And then all you idiots came along and took blockchain away from us and turned it into a financial issue, which it initially is not, right? Blockchain has nothing to do with finance. And unfortunately, we then went on with, we blamed Fabian Vogelsteller for inventing the ERC20 script, which then led to the ICO boom and this crypto casino that we have now. And I believe crypto is not a thing. Web3 is a gobbledygook marketing speak, and NFTs in their current form are dead on arrival. They won't go anywhere. So there you go.
Great, thanks. Perspective also of a techie. It's great to have you here, Martin. Yeah, I'll go on with Felipe Negali. He's the co-founder and CEO of Gen2, a white label securitization platform. Hi,
Yeah.
Felipe.
I think about Gen2, I mean, we truly expand the investment universe together with our clients and partners. Some are here. We build bridges into all asset classes, including digital and also into NFTs and everything that there is from alternative investments, public investments into the digital market. And we usually serve with our platform financial intermediaries that want to build bridges to the bankable world and make basically every asset bankable. And so it's very easy for everybody, and even institutionals, of course, to get into these groundbreaking and new innovative products.
Great, thank you. And last but not least, Michael Steuer. We just heard from you.
Not a doctor, to my parents' regrets.
This is the non-doctor side
yeah,
here.
exactly.
But a CDO.
I'll keep it short since you just heard from me. So I've been in technology across various industries for a good 25 to 30 years. Been involved on sort of the sidelines of blockchain since about 2012, and sort of both feed in, I would say 2017-ish. And co-founder and CTO of Make, as well as one of the co-founders of Casper Labs back in 2018. And at Make, we do a number of things specific to blockchain. We help develop ecosystems with best-in-class tools, and we have very much a focus on user experience and then sort of product quality. And we have a great team of engineers and designers and product people who spend their days trying to think about how we can make blockchain more accessible to the end user and go for adoption.
Great, thank you. Well, why is this topic so interesting? I think that digital assets and safeguarding digital assets really comes together at the intersection between finance, between crypto, and between cybersecurity. So we are really here on this hotspot of all these three important topics. And if we think about what happened last year, in the past 2 to 3 years, I think we really saw a big adoption when it comes to digital assets. We of course we saw some mismanagement. If we think about the FTX collapse, some seed phrases were mismanaged there, and the customers were totally ignored. We all heard about customer first, but what SBF did was really mismanagement, bad practice. And then last but not least, we see that an increased competition in this digital asset platform space exists, right? We see more and more platforms that emerge. So I think there are a lot of things that we should discuss about today. So let's kick it off with some questions. We discussed a lot about FTX, but I would just like to hear from you guys. What was your reaction when you read about the FTX collapse, and how did your customers react? What did you think?
So it was for me. It was a mix of really FTX, and here we go again. Because I think anybody who's been in this industry for longer than 6 months, this is not the first time, nor will it likely be the last time that stories like this happen in our industry. I'm sure those of you who've been here for a much longer time remember Mt. Gox and everything associated with that. So from that perspective, it wasn't as much of a shocker as it perhaps was made out to be. Next, after those two sort of reactions, I think there were conversations had with partners and employees and friends who are new to crypto and on like, well, what is this? Is this a symptom of crypto, or is it something else? It turns out that this is just plain old fraud. And what does it mean for the industry? So I think obviously there's a lot of things that we can learn from it, but this story is clearly fraud that can happen in it was not really a crypto story, is I think what I'm trying to say.
Yeah, I would also join in here. I mean, it's in all industries, things happen. Unfortunate things happens also to bigger companies or more popular companies. I guess it's just a true sign that in such a case, diversification counts, and you should always be aware that there is maybe not only one solution for what you're aiming to do. And yeah, as you've seen in banking, it can happen. And now we have a little bit of a more immature market here, which I think would all agree that it still has a long way to go. And with that, it's also important to monitor that and be diversified.
I would add we are managing billions of client assets, and it comes down to proper risk management and having the right business model. So, starting and referring to what you said, Martin, right? So we're a broker, we're connected to 20 odd exchanges and OTC partners. We have our risk buckets. We do principal trading, so we shield our clients from losing money on exchanges. Losing money on exchanges is an evergreen, right? And we have always recommended our clients not to keep assets on exchanges, which is why we take over the risk for them, right? So our clients haven't lost anything. We risk manage the situation. And then, it's also a question of custody, right? So, yes, you should have your money, like with us, deep in the Swiss mountain, right? Cold storage. But I think there are a lot of nuances here. And I was a little bit shocked to see the early response on proof of reserves, and that's kind of the wisdom. That's just one leg of the story, and I think segregation of assets, but really showing that you own them, that they're bankruptcy remote, that you don't lend them out. That is really important, and so all of these things: business model, segregation, real proof, and not just proof of reserves, which is kind of pretty much a fake thing, I believe, right? Or just one side of the stool. So, all of these things you have to get right.
And it also is a matter of course, the right professional partners. I mean, you're a perfect representative for that, the both of you. And with that said, maybe you have something to add.
Dirk, I will never get into a fight. We agree on everything. Don't get me started on proven reserves.
But don't call me a toddler again.
So FTX is a non-event. This happens everywhere. It was actually the best year for Uphold ever because people realized we're not an exchange. We don't have an exchange token. We don't play with people's money. We've never lent out a single cent of anything to anyone. So that was a good year. And this year will be even better.
So it's funny. So obviously, we'll talk about self-custody, and a lot of us do self-custody, and it's obviously an ideal for our industry. Not your keys, not your money. But there's a lot of issues with it still, right? Like if you look at sort of the history of crypto, I believe more cryptocurrency has been lost to loss of keys than to frauds or exchanges going down.
Yeah.
So when I talk to friends who are like, hey, listen, I want to buy some Casper, for example. What should I do? And should I put it on a ledger, or what should I do? I actually sent them to Uphold.
Thank you.
Because
this is not a plug. I had no idea. Thank you.
Because and I'll tell you why. Because I think a lot of people are not ready to deal with the self-custody solutions that we as an industry put out there.
People don't know how to use vending machines at the train station.
Their password is
self-custody?
Their password is password, and it's sticked on a post-it on their monitor, right? So, with all respect to my friends, like I don't trust them with keys.
Yeah.
And
I'm sorry, but the situation we have is absolutely ridiculous. We are told to put our funds into a string of letters and numbers, write down 12 words, and keep them somewhere safe in your... That's a ridiculous concept. Mixing Stone Age and digital technology at the same time,
But it works, huh? So
it does not work for most people. They lose millions.
We just heard a little bit about the custody and storage solution of Bitcoin Swiss. I think that would be interesting to hear more about it, Dirk, from you.
Sure, right?
Can we imagine this residing in a Swiss bunker? Tell us
Absolutely.
about
deep in the Swiss mountains, right? A lot of secret Swiss people surrounding it, right? So we have the whole James Bond solution, clearly, right? Everything you see in the movies, it's 10x. No, but to your point, we have wealthy clients, we have institutions, we have foundations. We were instrumental in the Ethereum, ICOs, a lot of things. So you have professionals who do some self-custody, but most of them, they trust us with their keys, right? And yes, we keep them exactly segregated from our company's assets, right? And we can show that, and it's safely stored, and there are multiple mechanisms to provide security. Yeah, but it's really what happens with FTX is really breaking all the principles of money management.
Yeah.
Right, it's
Yeah,
not
it
a
does.
deep technology
Nothing
crypto
to do
problem.
with
Has nothing to do with it. Right? How on earth you can think you can take money from customers, lend it out without telling them, not giving them the upside if you do it, and so forth and so forth. Right? This is pure wrong governance, failing on every basics. Yeah.
So you have a great solution, and it works for exactly those parties that you describe. You're not going to onboard 8 billion people on the planet, right? So there has to be a solution that we as an industry put forward that allows entire continents to still come onto blockchain and do that in a way that's both secure and safe, as well as intuitive to use. And it's not the 12 or 24 word seed phrase kept. I mean, some of us have saves at home. If you're in other places around the world, you don't have a home. So let's figure something else out.
There is also a legal dimension to this. What most people get wrong is that your keys are not ownership, they're possession. Right? There's a difference between ownership and possession in the law. Whereas a KYC, the fully authorized account, is something you own, whereas keys is just you possess them, right, in legal terms. And that distinction is important in the future. What FTX has created is a wrong dichotomy between exchange versus DeFi. DeFi is not the opposite of a centralized exchange. There are many more players and many more options we have. And this is what we have to explore in the next few years.
Yeah.
Now, back to you, Felipe.
No, sure. I mean, finally, as you see, we have a user-driven market that actually emerged in this example, and often doomed, but it needs the professional parties to keep it alive and to also set standards in that. And with that, I'm sure we're going to touch upon it. It will also lead a bit into regulation and into the combination of these elements. And they serve trust. They are there for a reason. They were not invented by an older generation. They are here to stay because it's investor protection. It's a lot of it combined to that. And finally, every market needs trust. Every transaction needs trust, and every safekeeping.
How is Gen2 really helping managers and investors to safeguard their digital assets?
Well, mainly through, of course, let's say, summarize the elements. We help many professional parties like Bitcoin Swiss or others in the sphere. Actually, over 200 parties we help to form investment products, and with that also the management of these investments, professional management of these investments for all sorts of assets, and also the safekeeping of their keys with that at the right custodians, with the partner of their choice. And oftentimes it falls also into diversification because they don't usually use that only with one party, but maybe they break that up and control that a bit better. So in the FTX scenario, yes, there were some parties that, of course, lost assets with that because they trusted them, wrongly trusted them. But many of the clients also had the safekeeping at different exchanges or in other formats, which helped. Yeah.
So a lot of challenges ahead, I guess, now in order to reestablish this trust that was gone. But what about the privacy aspect? What about what about the pivotal aspects of the custody solutions? What would you say, Martin?
I think the reason why I mentioned Web3 being a nonsensical marketing term that unfortunately will survive. This is not about the next installment of the internet or the World Wide Web. this is ultimately about identity and privacy.
Yeah.
And we have, at this point, no working identity solution anywhere. They all have major flaws. And in privacy, it's even worse. We have the understanding that the blockchain is completely transparent. But who really needs transparency? If you look at a private company like Apple, they don't want their trade secrets exposed on a public blockchain. Whatever is on the blockchain can be seen. Now, then we came up with CK Snarks, for example. CK Snark is a technology that basically makes the transaction between me, the user, and the blockchain private, but there are no secrets on the blockchain. So it's useless if I want to do anything that I don't want anybody to know, right? So there's a British game called the carrot in a box, right? If I hand you a box, you don't know what's in it. That's the point of blockchain. We need to have a technology that allows the blockchain itself to keep a secret. Until we have that, NFTs are useless, and Web3 is not going to go anywhere, because you will have, as you, very happy that you said that in your introduction, we have the enormous problem of cybersecurity. There were how many billions stolen last year from accounts? Because most blockchain companies even have no clue about cybersecurity. I mean, FTX didn't have a single cybersecurity officer, but it may shock you to know that many of the blockchains out there don't have any awareness of cybersecurity. And this is why in DeFi, we will keep getting hacked and hacked and hacked again, because the hackers are always one step ahead. I'm sorry to say, but hackers are fucking amazing, right? That's why they're hackers.
One more thing we agree on, yeah?
Seriously.
Yeah. And then, just to add on that, I think 2022 was the year when those weaknesses got super exposed, but the build-up actually happened in 20 and 21, right? So in hindsight, I think actually 22 was a terrible year for customers, terrible year for the industry, but was a very important year. 2021, all those players who came out of nowhere, took over the world, didn't have built proper infrastructure, didn't have built up cybersecurity walls, right, and so on, got exposed. And I think that's a learning, right? And in these times, I'm always saying to my team, right, keep the heads down, keep fixing, keep on look on cyber attacks, and that includes simple things like DDoS, right? All this stuff that in the TradFi industry is well we're used to, and make sure the thing is proper and sound, right? So this is not the time for hype and moonshot talk and all that stuff, right? So let's get the basics right and then excel from a new standard, better standard, I hope.
Absolutely.
Yeah, take it step by step, but you're building an ecosystem, so you build different elements.
Yeah, so again, like we try and focus on how do we get users to adopt blockchain technology in a responsible way, and one that's intuitive, the one where not just people like us know how to use it, but eventually our parents, our neighbors, the 8 billion people who are not yet using blockchain technology. And while there is, again, tremendous value in sort of the rails that you are building, I'm also thinking about the parts of the world that are currently also unbanked, and new banks are not the solution for them, right? There has to be a solution that is self-custody based with easy and secure access that is accessible to large parts of the world where you cannot go to Bitcoin Swiss or any of the banks in sort of the Western world, let's put it that way.
For any technology, if I may echo that, any technology to be successful, it has to be invisible. It has to disappear. Yeah. Right? I do not want to go to Aldi's and buy whatever I buy at Aldi's and worry about how I transact and what your address is and where's your QR code. Right?
Do you prefer Visa or MasterCard or Swift?
I don't even want to worry about that. I want to hold my phone, there it goes beep, and I can leave. This is user experience. Yeah. Scanning your QR code and sending you something to an address is nonsense, right? That never will lead to any kind of mass adoption. Yeah.
Now, the last question that I want to ask you is the must question. I guess we are all customers. We are all expecting a certain protection. So Maybe I will ask you, Martin, what do you see in terms of the regulation that is going to come from SEC? I think you're much closer to US.
You mean the regulators, what they do with us? Well, the regulators are finally catching up. When I started, well, before I joined Upward, I was a consultant. I got into this consulting business by request of a central bank. And I ended up talking to the regulators. And at one point, for example, the European Central Bank, there was nobody who knew anything at all about blockchain trying to write the regulations. This has changed enormously. If you now go to the regulators in Washington, in this case, it's actually more Frankfurt than anywhere else, they have enormous knowledge. There are people like Philip Santner, that they're really, really good minds at work and the bankers, the regulators have realized that this is not a crypto craze. This is a technological sea change that they need to get on top of it. It's not about avoiding crypto defrauding customers. It's about accepting that the technology is here to stay and how do we regulate it. The biggest problem in this for the regulators is DeFi. If you have an account, so there's no such thing as a wallet, right? There is either an address or there is an account. If you have an account, this is something that can be regulated exactly the way that banks are regulated. We need to start regulating, and this is what the consensus is now, we need to start regulating these crypto, or as they're called now in America for some reason, virtual commodity providers. It must be the CFTC that's where the commodity comes from. But they have to be regulated like a bank. And a bank can't lend out money without the regulator's knowledge. And the same must be true for all the other. We just need to become financial institutions. The problem here is that leaves DeFi to itself. And I'm very happy to say that in my latest discussions with these people involved, there has been a rethink. And we are actually now facing the possibility that regulators will say, DeFi be DeFi, slap a warning label on it, like a cigarette, but we concentrate on the regulated players. That would in many ways be a good outcome if the warning label is strong enough, and I'm afraid it won't work in many countries, right?
They can't just wash their hands off of it.
They cannot just wash their hands off of it. So this will be the main discussion for the next year.
But that's in distribution of financial products already the case. There are warning labels. There are different regulations all around.
Who reads the fine print?
And who reads the fine print? Exactly. But maybe there is also time for a classification of these investor types. Correct. For their own protection and also for the build-up of this market and for the greater future. Dirk?
I also believe that regulators will focus on bring some of the rules from the securities world into the crypto and digital asset worlds. Just to give an example, right? Our industry is grown with, call it vertical players, so you can be an exchange, a lender, a hedge fund, a clearinghouse, all in one shop, no Chinese walls, right? And that got just exposed. Super exposed by FTX, because that invites you to conflicts of interest, that invites you to insider trading, that invites you to disappropriation of customer funds, right? So I think that the regulators will go hard on this, right? Because listen, an exchange in the securities world is something that is super boring. Mm-hmm. They just do trades, they don't make a lot of money, but they do it at scale and super safe. I think that's not a bad concept, right? So I think wherever we end up, right, I think they will hone on this as one of the things.
But I see oftentimes the question, why not? Yeah, why? Yeah.
Yeah.
Or many people think that that should be questioned. Why the regulation should be questioned, but I don't see that. How is that on your end?
The big problem, I think, is that what we are talking about now is diametrically opposed to the original idea of blockchain and DeFi. The original idea was an almost anarchic movement of self-sovereignty and self-governance, and that can only work with proper identity solutions. Mm-hmm. Once we have those and we have real privacy, so not just CK snarks, but things like TE or MPC solutions, which don't want to get into technology, but there are privacy technologies that are in their absolute infancy that will come to fruition in the next few years. And once we have proper identity and proper privacy, then we can move on to actually owning an NFT as opposed to possessing it. And then we can move on to having control over something in a DeFi world. DeFi, as we have, as it is now, is, as Ralph Copley rightfully says, nothing more than over-collateralized lending. It doesn't work the way as advertised, right?
So then, just to kind of understand where we are right now, how far are we from a proper self-sovereign identity solution that is
Accessible
and user-friendly? How far are we from that?
I think we're very close to a Band-Aid because we are stuck in this Ethereum world where you got layer ones and layer twos, and a majority of people think blockchain is Ethereum, right? That fallacy is just, in academia, nobody's talking about blockchain. I mean, we call this classical blockchain. You move on to the direct cyclical graph, organical graphs, and the proof of observable reputation, for example, which is far better than any other proof that we have. But these things are now stuck in academia and in some startup projects. And unfortunately, this space is moving so fast that I have no idea what the final solution to this problem will be. I don't think we have to wait long. I think regulators will be moving much quicker than we anticipate. I think that the whole securitization and tokenization will happen much earlier than anybody expects, because we now have a reinforcing trend. More and more people are getting into this space that when they realize this is a technology I can build on. Everybody I know comes from traditional finance. My own head of sales comes from the Deutsche Bank and Bank of America. They leave their jobs because they're dissatisfied and they move into the exciting world of crypto. So I think there is so much impetus now in this space that I don't think we have to wait long. It may be 2 to 3 years down the road. MiCA is due in 2024. It's going to be the later years, so 2025 might be a good starting point, right?
Okay, so Michael is already starting with the UX.
No, but I mean, so first of all, I think it's very hard to predict timelines in this industry.
Yeah.
I think drawing parallels to what we've seen in AI recently, where everybody thought this is like 10 years out, and all of a sudden it's here. And I also agree with Martin that like this is about iterative improvement, right? There are band-aids that you apply until you get there. And specifically with self-custody, I think there are ways that we can improve the experience from a safety perspective. For example, Casper has a sort of a delegated key functionality where you can have social key recovery. So while you may not want to put your trust in a central authority, or maybe the bank, but you will trust your wife and your friend and your neighbor to maybe help you recover your key should you lose it, right? Because one of the big complaints is what's Bitcoin's phone number? Who do I call when I lose my password? There are ways of bandaging those things in a way that's still self-custody, but safe.
Question to me would be, would that be the moment of mass adoption?
Go ahead.
You're looking at, but you know, I just let's make it simple, right? Privacy is another expression of trust. I think trust got substantially eroded last year through the events. It always takes longer to rebuild trust than destroy trust, right? Let's keep all our heads down, keep fixing, right? And time will tell when that happens, whether it's in 2 years or 3 years.
You sound like my boss when FTX happened. He called me and said, "Martin, we keep a low profile now."
No, but you know why I'm saying this? Because I honestly tell you, right? You can call me a relatively new joiner. The reason why I was playing with crypto and digital assets and didn't join was because of the hype.
Correct.
Honestly,
Correct.
I hated it. Right?
Anything can never end.
Yeah, I think there was too much wrong stuff in the air, which has hopefully cleaned out.
So all in all, this last year was a good year. We cleared the air, right?
Totally.
Okay.
Every market does, by the way, before mass adoption.
Yeah.
We also know that. So maybe it's time
LFG, this will be our year.
There we go.
There we go.
Okay, I like this. So I think it's great that we are finishing in a very positive tone. Tracy already made me a sign that we need to finish here off. I think we all agree We have a lot to do, a lot to recoup this year, so let's keep our heads down and continue building and putting a very important eye on cybersecurity to protect our customers, our solutions, our institutional clients. So, cheers, thank you everyone.
Thank you.
Thank you.
Thank you.